My guest, Mr. Damian S. Lupo, and he's got a great book called Total Control Financial Guide to the QRP, which is the Qualified Retirement Plan. Now, I was able to sit down with Damian, and what he told me really shocked me because I'm a big fan of the self-directed IRA, but what he's going to do is kind of flip that on its head. Damian, are you there?
I am, Gavin, and I'm going to crush the IRA. So
Don't crush my IRA. I like my IRA.
I know everybody loves it, but you won't love it here in a minute.
All right. So we were sitting down. And you were trying to explain to me your book and the guide to the QRP and using basically like a self-directed 401k. Can you kind of explain to me how this works and help me wrap my head around it?
Yeah. So basically what happens is there's a typical option with IRAs and 401ks where people just sort of have 5 options, different stocks, bonds, and cash, and they're stuck. And then there was this newer thing that came out that people started jumping into, like you mentioned, that you did, which was the self-directed IRA, where you put maybe $5,000-$6,000 into this, start doing some alternative investing, and maybe do some real estate. And that's what a lot of people liked it for. Or maybe they wanted to buy some precious metals. Most people, though, for investing purposes, all about the real estate. The problem with it is that 2 things. One, you've got a custodian that's going to fee you for transactions, like with rental properties, or you write a check, or you blow your nose. Like they're going to charge you for everything, and it's nonstop. The other thing is you're limited in your ability to take on debt, and not that you can't take on debt, but when you do take on debt, like with a mortgage for a property you're investing in, you're going to get taxed on the actual profits that are that correspond to the percentage of debt. So just for an example, you buy a house or something for $100,000 and your IRA invests $10,000 and you take out a $90,000 loan, 90% of your profits are going to be subject to tax at around 35%. So it's a disaster. Well, that's well and good, but for the most part, people go, great, I'm stuck with that. So they don't use debt, which is a shame because we're talking about real estate. So there's all these opportunities. And what we found, when you dig into the laws and the IRS rules, the QRP, which is what I wrote the book on, you can go in and use your retirement money. So same basic rules, but you can use your retirement money to go buy real estate and use debt, and there's no tax on any of the profits. It totally changes the game completely for the real estate investor.
Now, where do I sign up for this?
You sign up right now, right with me. Here we go. Total Control Financial. I mean, it's really that's what it is. It's just a simple process to shift your money from the IRA to the QRP, and then you're off to the races with your checkbook.
Now, I can shift an IRA into the QRP or a 401k into the QRP.
That's the cool thing. You can shift either one or both, or 100 of them. So a lot of times people have 8 or 10 or 15 different 401k accounts. They've got IRAs. They've got this mess of retirement plans.
That's me.
And because what are we doing? We're moving around from job to job. We have different things. We started at one bank and then we do it. I mean, it's all over. And what's cool is you get to move all these things, all these accounts over into your QRP, and all the money is in one place in your checkbook. No tax, no penalty. It's a rollover, and now you're in total control, which is awesome.
Okay, so I roll my money into this QRP, and I basically get a checkbook.
You do.
And say, knock yourself out. What can I buy? What can I not do? Do I have to return the money at a certain thing? What do I have to file with the IRS? This sounds too easy to be true. Where's the hook?
So you're entering the roller coaster of the QRP, and this is the exact same thing that everybody goes through. They go, wait a second, it sounds too easy. Yeah, it sounds too good.
I'm in real estate. There's got to be a hook. Where's the downside?
There's a downside. Well, this is what happens. And then after a while, people read the book, we talk about this, and then they get really pissed off. They didn't know about this 10 years ago. So we're in the first stage. So basically, once you get your checkbook and your money's in the account, the IRS says you can invest in anything other than A, B, and C. Yeah. And A, B, and C are like antiques or wine, or you can't invest with your spouse or your kids or your parents. There are certain people you can't invest in.
The same disqualified people.
It's the same people as the IRA, so the rules are the same. Yeah. And basically they say, we're not going to tell you what you can invest in. Here are just the things that you can't, which really opens you wide up to the entire planet. Foreign property, startup businesses, like you name it, you can invest in it pretty much.
Nice. So is there a certain filing that I take my IRA money, I get a checkbook, I go buy a house with it, I'm going to flip. Do I have to filing with the IRS? How does the IRS know where my money went? There's got to be some type of checks and balances here.
Yeah, there is. Eventually, so there's 2 things that have to happen. One, if your assets are more than $250,000, you've got to file a form called a 5500. Most people just have their accountants do it. And what it is a disclosure of assets for the account. If you don't have over $250,000, you're not required to file it. So essentially, you don't have to file anything. All of your money is working. There's a lot of privacy. I mean, to be quite frank, there's not a lot that you're having to do with assets under $250,000. You're just there doing your thing. Your job is to make sure that you're keeping good records, though, because if you get audited and you're not keeping records, you're going to have a thumping by the IRS. So that's really the check and balance, the occasional audit. I don't know how often they happen. I don't think they happen very often. But as long as you're keeping good records and not breaking the rules, it's a really simple place to be, and you're not dealing with custodians. You're not getting feed every time you do something. I mean, really, truly, that's awesome.
Yeah. Wow. So you got to file one form with the IRS. And how much money can I put into this? Can I go and deposit money directly into this account?
Yeah, here's the thing that blows people's minds. When we think about an IRA, most people are throwing $5,000 or $6,000 into this thing a year, which is great. So over 20 years, you have $100,000 in there. I mean, that's awesome, right? $100,000 to retire on.
Yeah.
The QRP, you can put one person can put $54,000 a year, and if they're married, they can put double that, and if they're over 50, it's up to $120,000 per year for the couple. So over 10 years, just the amount you contributed could be over $1 million. It's 10 times better than an IRA. This is why the IRA sucks. This is why you would never want to use an IRA if you had a choice. And really, it's because you didn't know about the QRP. That's the only reason you wouldn't do it.
I know. Where you been all my life?
I've been waiting to meet you, my friend.
Wow. So how much did you say you can put in a year?
54,000 if you're under age 50 per person, and then 60,000 there's a catch-up provision. So it's between two people for two spouses, you've got 120,000 a year you can put in.
And now how do you pull money out when you're ready to retire?
Well, there's two different ways. One, so you can pull some money out anytime. You can write yourself a loan for up to $50,000 anytime you want. And that just means you've got a line of credit on your retirement account that you wouldn't have with an IRA or a 401k. And I mean, it's really difficult. You write yourself a check and you deposit it, and then you're done. So that's one way. But when you retire, that's where you have access to your money, and you start pulling money out. I mean, you write yourself a check. There's certain requirements that you distribute money over a period of time based on your age. But really, it's that simple. It's the distribution that you're pulling out. And what's really cool is that there's a Roth component. So just like people, you probably heard of the Roth IRA, where you put after-tax money in, and then you get to pull out all the money, all the gains, everything tax-free. So here's what I like about this. Unless you're planning to be poor, which we've been brainwashed into this idea that we're going to make less money, and so we should defer our taxes, and then when we retire, we'll be in a lower tax bracket. Why would you want to plan to be poor when you retire? That seems crazy.
That's ridiculous.
So, it's stupid. And
to take the tax hit when you have the big income.
Yeah, so I think let's plan to be rich. Let's plan to do well.
But the mentality is let's make our income look lower so we're not paying taxes now. But the fact of the matter is, the reality is later you're going to have less income and you're going to end up paying more taxes on it.
Yeah, so this is just brain damage, and it's a bill of goods we've been sold. If we think into the future and we think about wanting to be in the future and not paying taxes at all, then we structure ourselves using the Roth component, which means we put after-tax money in now, and down the road when tax rates are whatever they are, and I believe they're going to be a lot higher, and at the highest tax brackets, they're going to be a lot higher. I just want to be in a situation where I'm paying no tax. So I don't care what the tax rates are. They could be 50, 80%. Doesn't matter to me. And they have been that high back in the 50s and 60s before, under the Kennedy administration, they were changed. But they were up in the 90 percentile for the highest tax brackets. So I would rather not worry about that. And you don't have to with a Roth, because all the money that you make and all the gains and everything is all going to be tax-free.
Yeah, so you can do a Roth. Is it what's called Roth 401k?
Yeah, basically what happens is your QRP is set up, and you've got the option. It's all built into the QRP. One account, you've got the ability to have you and your spouse have accounts inside of it. You've got the Roth, you've got the deferred. All of it's part of it. All of these different types of accounts inside your QRP, and so you do it once, and you've got all these options. And I mean, it's that simple. It's really just a series of bank accounts that you're going to end up with.
Now, have these QRPs been around a while, or is there a recent tax change that made these available?
The original underlying laws made this available with the ERISA Act in the early 70s. So 40 years they've been around. And then in 2002, there was a Economic Reform Act, one of these giant tax bills. And what it allowed people to do was to add the deferral piece and the profit sharing piece. It essentially allowed an individual, one person, to have their own 401k. And so we've created the architecture for the solo operator to have their own retirement plan that's using the 401k technology, the 401k rules. And so you get to run your own thing, just like GE or Amazon or the biggest companies. You get every option there, and it's in your hands, your control.
Wow, that's pretty slick.
It's super slick. It's awesome. I mean, it's incredible.
What's,
So now we're getting into the excitement phase. You've gone from the how is this true to wow, exciting.
Okay, what's the biggest drawback? There's got to be a hitch. Come on, there's got to be a drawback somewhere.
There is. There's truly nobody looking over your shoulder. And so if you're nervous or you're not responsible, like you can't balance your checkbook or you don't keep up with things, this is probably a bad idea because you're going to make a mistake that's going to get you thumped. If you can balance a checkbook and you're willing to play by the rules that are very straightforward, they're in the book. I mean, they're in my book. It's clean, and you play by the rules. There's no downside. It's for the irresponsible victim. This is not a good plan. That's the person that shouldn't do this.
And the book is Total Control Financial Guide to the QRP, and you can get it at totalcontrolfinancial.com.
You can. You can also get it on Amazon. If you're really ready, excited, you can get it. You can download it. You can have it in 15 seconds on your Kindle.
15 seconds? I can't wait that long.
Okay, 5 seconds. Get a better internet, Gavin.
That's outrageous. Wow. So, man, that's awesome. And, okay, so as long as you manage the account, like all like rental income, flip incomes goes through the account, whatever, keep everything paperwork-wise, there's no major drawbacks with the IRS.
No, and it's got plenty of case law. And you've got the ability to really run your own show. And one of the other cool things that may or may not be considered an investment, but it's a huge distinction between the IRAs and the QRP, is that if you want to have some real physical gold and silver, you can buy it and hold it yourself because you're the trustee and the administrator for your plan. All that means is that you don't have to have your metals in a vault somewhere. So if you want that privacy and you want to physically hold metal, your QRP, you can use your retirement money to buy gold and silver. You can't do that with an IRA. You have to have it at a vault somewhere. So to me, that's not really that private. I like to have my stuff with me where I can hold it and be a home-based pirate.
Love it and touch it and hold it and feel it. Now, yeah. Wow. So you can literally buy and hold. Now, do you have to use a special bank account or can you use any bank account?
No, the way that we set it up, we actually set you up with a number of different entities so that when you walk into your bank, you get to, whatever bank you work with, you walk in and you're going to be able to set up an account right on the spot. It's going to be a business account, business and LLC account. And so we're setting this up so it's so simplified. It's going to take you 10 minutes to go and set up your account. And then all of a sudden you just have to figure out how much money you want to put in and where you want to roll your money over from. And that's it.
Okay, so your service, you basically help people set up the account, get the LLC going, roll the money from their existing account into the new QRP account?
Yeah, we do all the heavy lifting. So your job is to decide how much you want to contribute and really where you want to set up your account. You pick your bank, you decide how much you're going to contribute, and then decide how much you want to roll over from your other accounts. And we do everything else on the other side. So you don't have to worry about the details and trying to figure this thing out and dealing with attorneys and stuff, because that's some people will do that. They want to spend $50,000 to set one of these things up. We don't think that's a very smart idea because we tend to like our money more than that. So you should too.
Now, how much does it cost to set one of these things up?
They're $2,000 flat to set it
up. That's outrageous.
I know. It really. I mean, it should be $20,000. It's for what people are getting. It's crazy. So maybe actually I'll take you up on that and charge you the $20,000.
Raise your prices. Wait a minute. We're recording this. Yeah. But wow, so you basically do all the heavy lifting. All they got to do is say what bank they want, how much they want to put in, where they want to roll, and it's a roll over from a traditional 401k.
Yeah, you get both options. You've got the contribution you can do every year, and you also have the ability to roll over stuff from your previous accounts that are in force. And there's no limit. You can roll over 1 or 20 as often. I mean, really frequently if you want to. You've got so much flexibility with this setup that I can't imagine why anybody would not want to do it if they were able and qualified.
This has got to be really pissing off some investment managers.
It's going to piss off a lot. I mean, our entire tagline for the company is disrupting Wall Street because it disrupts their model, which I'm really happy with because if they're making less money and the people that have their accounts are making more money because they're keeping all those fees that the banksters are charging, hey, that makes me happy. I want to see people rich. I don't want to see Wall Street get richer. That's not our mission is to elevate Main Street, not Wall Street. So yeah, it's going to tick off the advisors that are really just selling their goods and trying to get people to keep their money with them instead of handing the money back to the people to run it themselves. The truth is we all have the ability and the skills. And if we have the commitment, we can do this. No advisor is going to care about your money more than you will.
That's
so I want to put it in your hands.
Yeah. Wow. That's awesome. Now, do you have to keep any type of paperwork, fill any special forms when you buy and sell real estate or do any transactions like that? Or just have a kind of a ledger?
It's really the same stuff you would do. If you think of your QRP as a business, it's really the same stuff. So you're going to keep the same financial documents. You're going to keep a tally with your ledger. Maybe that's QuickBooks or a bookkeeper. You're doing the exact same thing. So you need to treat it like a business and be a pro about it. And you're going to be totally fine.
Nice. Wow. That's pretty awesome.
It's super awesome.
Yeah, it is. I can't believe that. You know, I was literally in the bank the other day, and this little old lady had to be 85, and she was literally buying bonds or something. They're like, "Oh, we'll give you 0.03%." I'm just like, and she's like, "Okay, that sounds really good." I'm just like, "Lady, you're going backwards when you figure inflation."
Yeah, I mean that's the problem with stuff. Either you're going to be in a really risky space with retirement plans, and what most people really think in the back of their mind, they look at their 401k or their IRA money, and it's almost this mythical ghost-like account that they don't really have a connection to. It's not real money. They can't touch it forever. They can't control anything about it, so they don't take it very seriously. And so either their money is stuck in some type of 0.3% account, or it's being used as a casino chip for the Wall Street system, and it's being thrown around, which is eventually going to hurt. You're going to get hurt. So why would you do that? Because you don't know any better. And really, what happens is as soon as people realize they have a choice to get out of that 0.3% bond or the Wall Street casino, they go, "Get me out of here! I want out of the jail. I want off the roller coaster. Put it in my hands."
Nice.
And it's a switch.
Yeah, nice. That's awesome. And yeah, you're right. As soon as more people wake up to using these alternative investment strategies, they can really make a lot of money and do it all tax-free.
Oh yeah, totally tax-free. And then you leverage on things that you can actually touch that make sense to you. I mean, really, I'd wonder if you talk to people that have their money in these quote unquote traditional things, the Wall Street stuff, how many people have actually looked at the companies that they're investing in? How do you know how the companies are doing? Have you looked at their financials? We just take all this stuff for granted because this system says invest for the long term in this thing and it'll all be fine because you're going to make 12% a year according to some radio personality that will remain nameless. But I mean, it's BS. You got to take more control than that and move yourself into something that makes sense, like real estate.
My brother literally bought a racehorse in his IRA, self-directed IRA. And I'm like, well, he's like, well, I only bought a partnership. I'm like, so you bought the left butt cheek of Seabiscuit, huh? And he goes, well, yeah, it's totally cool. They'll let me do that. I'm
Biscuit butt.
I'm like, okay. And what's the game plan here to make a little money? Is there, is this just, I don't know. I think he finally got out of it, but the control you have over the IRA and, the QRP is awesome. And if you leverage it, even if you bought a rental property, didn't touch it and just collected rent, and then all of that rent income, when you take it out, is tax-free, is amazing.
Well, Gavin, here's one of the things that really hit me recently because I was thinking about the 1031 exchanges, and there's actually talk about killing that thing in Congress right now. So I was talking to a buddy of mine that has a lot of property, and he's constantly exchanging it. And I said, can you imagine what it would be like if you didn't have to exchange, if you could just buy property and sell it and not be forced into something? Instead of worrying about, I don't want to pay taxes, just take taxes out of the equation. And he looked at me and he thought, what do you mean? And I said, well, if you buy property with your Roth money inside your QRP and then you sell it, there's no tax. And you don't have to go find a deal that may be a bad deal just to avoid the capital gains, because there are no capital gains. There's no depreciation recapture. There's none of that stuff in a Roth portion of these accounts. And he goes, whoa, I need that now. And I said, I know. Well,
and the problem is people can become so focused on not paying tax.
Right.
They lose the sight on they're going to pay it twice later. Or, like my friend's like, I'm like, dude, you keep kicking the bucket down the road with the 1031. What's going to happen? He's like, what do you mean what's going to happen? He's like, I'm going to die. I'm like, that's your long-term strategy?
That's the plan, right?
And I'm like, that's your plan? He goes, well, I'm not going to live forever. I'm like, okay.
Oh, This is crazy, but this is what people think. It's their plan, and it's consistent. 1031 exchangers. Eventually I will die, and the basis will change.
Yeah, and then my inheritors will not have to pay that. I'm like, great plan. I'm like, at least you're not surprised you're going to die one day. But I'm like, to defer the tax. Yeah, he goes, well, I'll just die one day. I'm like, and then he goes, then it won't carry over. I'm like, that's a great plan. Did you come up with that yourself?
Yeah, one of the things that people have started to realize is that when you inherit something, so there's this really cool thing. It's a little morbid, but it's kind of wild. When you have, let's say your grandpa or your great uncle Ned has a Roth QRP and you inherit it, and you're 25 or 30 or 40 years old, you have access to that money to grow and to spend at any age for the rest of your life. So imagine that for somebody that is not 60 yet. For us, I mean, if we do this, if we set this thing up, and because people are going to die, and if you help them, if you set one of these up and you said, look, family, I want to create a legacy here so that we can keep more of the money for our family and not be giving it away to the federal spenders, you can literally set yourself up with your family to not pay taxes forever. I mean, for decades, for your whole family. That's a pretty powerful, compelling argument to set this up like pronto.
Yeah, that actually is. And yeah, I mean, that's a much better plan. You know, I get people all the time that like, they come to me and go, oh, my dad gave me his house because they're trying to try and avoid inheritance tax. I'm like, you just made the biggest mistake of all. And he's like, what do you mean? I'm like, your dad had a basis on this property of X, you know, and to avoid inheritance tax, which doesn't kick in until $1 million, $500,000, which was not going to affect you anyways. He gave it to you and changed your basis because his basis was value today to what it could sell. Your basis is what he paid for it 40 years ago.
A huge mistake. And what it sounds like, the news, that the update, I mean, the estate tax exemption now is over 5 million.
There you go, 5 million.
My father passed away a few years ago, and I remember looking at this stuff going, whoa, this doesn't even affect most people. So for somebody to transfer assets beforehand like that, they just don't understand that they're not going to have an issue. They are screwing themselves by that.
Yeah, I'm like, you just took maybe a $5,000 tax hit and changed it into a $70,000 tax. I'm like,
it's brutal.
I know. I'm like, please don't do that. Please. They're like, well, we don't have to go through the probate process. I'm like, that doesn't cause tax. It just gives it to you. So yeah, there's a big misconception about taxes and probate and, you know, inheritance and everything else. But wow. So how many of these have you actually done? You've probably helped a lot of people start these QRPs, correct?
Yeah, over the last 6 years, we've put somewhere between 4,000 and 5,000 of them together. So it's
wow.
There's a lot. It's funny because it might sound like a lot, but there are tens of millions of these accounts out there. And in general, they're mostly retirement accounts. We're talking about 401ks and things. So most people have not heard of them. Most people have the standard IRA, the standard 401k, and there's trillions of dollars sitting in these things. So one of the cool things for people that are in the real estate world that want to invest, not only can you tap into your account, but once you end up doing that and you get excited about it, you're naturally going to tell everybody you know. And then all of a sudden, guess what happens? They do the same thing, and now they're looking for deals. And if you're already in the game, you've got a new money partner potentially, or somebody that can help support your deals. So it's getting started and doing something now is really going to leverage into other people in your life engaging in a similar way that's going to end up supporting everybody. So it's kind of an exciting space to be in.
Yeah, no, it is. And I know, especially when the IRA space, word of mouth is gold. You know, somebody gets it, they tell their neighbor, they tell their brother, they do it. And, you know, we partner IRAs all the time. I'm doing it right now. And, you know, it's good to have that money available and be able to invest it and track it and figure out what's going on with it. And then one day you don't have to worry.
That's right.
It's sitting there for you all tax free.
Yeah. And one of the things that I know people do, and I don't know if you do this, I think you mentioned that you may be doing it, or at least you probably talk about it, the hard money lending with your accounts, and you can basically become the bank.
Oh, yeah.
So
do it all the time.
You don't even have to invest in real estate. You can just be the bank and loan the money out and get 10 or 12% versus 10 or 12 basis points, like 0.1%. It's an amazing opportunity.
Yeah, well, I know enough investors where they'll call me and go, I got a deal. You got any money? I got money. You got a deal? And then we kind of horse trade back and forth and kind of, he's like, well, I got the money for the house. I don't have the rehab money. I'm like, I got the rehab money if you got the money. And so we kind of partner back and forth that way. It's a good way because, he's like, hard money lenders are like 12% and 2 points or, and then there's 70 to 70% ARV.
Yeah, I mean, there's you create all sorts of opportunities here because we're using our brains and we're not using the dogma that we've been pitched by this system that says, here's how you're supposed to do this. We start thinking, wait, because really we're asking a better question.
Yeah.
How do I engage in something where I have control? And that's what this is.
Yeah. Yeah, that's absolutely correct. Because you are kind of thinking outside the box, and it does give you a kind of a good benefit of being able to have cash on hand to use however you want to. I've flipped in mine. I've wholesaled with mine. I've hard money lend. I'm doing a bridge loan right now, and it's not. It's easy to do, and the cash is there whenever I need it. It's ready to go. So,
well, and is okay. So it's easy because you're doing it because mentally you've made the decision and you're comfortable with it. These things aren't hard to do. It's the mind shift. It's going. I'm going to do something different, and you have to really get your mind around it. Once that happens, the deals are not complicated. To me, what's complicated is trying to figure out what's going on Wall Street.
I'm not smart enough because I have a really good gift with stocks. I can lose my shirt in a single bound. I mean, somebody sneezes in some foreign country and stocks take it, then there goes all my money.
Yeah, what's funny to me, and it's a little sad, is all this, the commentary around investing in stocks and what's pitched to us, even by the world's greatest investor. We all know who this is, Warren Buffett. And the pitch is invest for the long term. I invest in Coca-Cola and Gillette. This is what he says. And yet what most people don't know is that Warren Buffett is making billions of dollars selling option contracts. He's an active investor. He is in the middle of his stuff. He's not just sitting on the sidelines sipping his Coca-Cola and chomping on See's candy. He's literally in the middle of the trading, and we have to be active. We cannot be on the sidelines and think that we're going to be okay financially. It's a bad plan. You got to be responsible.
But he's also a numbers genius.
That's true too.
Where I am not.
Totally numbers genius.
Yeah, so he can look and analyze companies and figure out what's going on and knows the deal, where I don't not have the time nor the wherewithal to do that.
He's kind of a savant in a way. I mean, he can think back to 1973 and talk to you about the financials, the earnings for all these different companies because that's his brain, that's his gift, and it's brilliant. I'm not like that.
Yeah,
you're not like that. That's not our thing.
Yeah, but the thing I like about stocks is if you've ever worked for a major company or even a medium-sized company, when we have dividends, they have money at the end of the year. What do? They pay bonuses, they pay payroll, they do this. Wait, we've got this big tax hit. Let's buy all the equipment we can buy to defer our tax base, and then what's left? Where does that go? Shareholders.
Right at the end.
Yeah. So the CEO got a $12 billion bonus, and then the shareholder made a nickel or something. It's like,
yeah.
Well, then we had to dump all the cash. Well, why don't you give it back to the, so I'm not a big fan of stocks. I think I only hold about 4 of them right now, and they're not making any money.
Well, it's funny because the last time I owned stocks, I did it because I was buying Starbucks like crazy, and I felt like if I invested in Starbucks, it would make it okay for me to spend a couple $1,000s a year on my lattes. So I literally did that plan until the end of the year. I looked at my spending patterns and went, I need to sell Starbucks so I can stop justifying this insanity. Like, what am I doing? I can buy myself a full home version of a pop-up Starbucks. So I kind of did that instead. But it made more sense. It was and what is fascinating right now, all these companies out there on the S&P and the Dow and the Russell, they have tons of cash. They're making tons of money. And what you just said, they're not putting it back in their shareholders' pockets. They're buying back massive amounts of shares, which is also creating a lot of upward movement in the markets. So it looks like everything is doing good. Well, here's who benefits. It's the CEOs. It's the high-level C-suite people that have all these options. The shares up, great. They can sell their stuff, and they benefit. Who doesn't benefit? People that are hoping for dividends, that are actually needing the cash flow. So it's just understanding that these things is really helpful in making the decision whether you want to be on that roller coaster or whether you want to be off of it and having control.
Yeah. The only thing I know is when everything crashed, I bought about 4 stocks. I bought Apple on sale. I bought Visa when it came out as an IPO. And I've made a little money on them, but that's it. I've never traded them. I've bought them and I held them long term, and then once they plateau, I sell them. That's it. That's a very complicated plan I have. It's taken years to practice. So, I don't know. I know people that, when Exxon Valdez went on the rocks, they made a fortune. They bought Exxon Valdez when it, and and if you can do that, that's great. I can't do that, man.
Absolutely.
I understand
You
real
do
estate.
what works.
Do what?
For you. I said you got to do what works for you.
Exactly. So this is actually your 5th book, right?
Yes.
What are the other 4?
So I've got Maverick Mistakes in Real Estate Investing, how I lost my first $1 million.
Ooh.
And it's funny because I thought that was a lot of money until I lost 20 million.
Oh.
And so that was an adventure. And then I wrote a book on gold and silver that's called The Quick and Dirty Guide to Gold and Silver. And then I wrote Reinvented Life, which was my story of building up the real estate portfolio and going through that whole process, blowing it up, reinventing myself. And it's really applicable and helpful to people that are doing any type of reinvention, going from whatever they're doing. They're a teacher, or they're a plumber and they want to be a yoga instructor, or they want to shift into investing and be in the real estate world, or podcasting, or whatever it is.
Yeah.
And so there was a lot of focus on giving people tools so they could take action. And then there was an early version of a QRP book that I'd put out, and that was kind of the baseline. And then the newest version that just hit bestseller this last week is everything updated to 2017 rules. And so there's just all the current stuff that you can use and take advantage of.
So give me a brief overview of how to lose $20 million.
Let your ego take over. Buy a lot of property. Focus on the money only. Don't have any values. Don't have a mentor, and think that you're invincible.
Oh, that'll do it every time. Those are
Every time.
Those are the keys to success in losing your shirt, right?
Yeah, and everything else. Your pants, your shoes, your
Yahtzee.
house, everything. Man.
Oh, man. Wow. But the good news is at least you learn from it. Some people wouldn't learn from that.
You know, one of the things that you can do to learn anything is to write it out, write it down, and publish it. Because it gets it out there, it frees you from it, it takes the weight off, and then you can look at it and it kind of teaches you going forward. It becomes a black and white mentor of your past that is really useful because it reminds you, this is what you did. Let's not do the same thing again. Let's write a new book, something more interesting. So it's waiting if we're willing to acknowledge the truth.
I literally know a guy who lost millions of other people's money in the real estate market and blames the real estate market. Oh, the market.
Yeah, I did too for a while.
The market shifted. We were at dinner, and I'm like, I gotta go. My wife's looking at me. I'm like, time to go. Because she's like, what's the matter? I'm like, I think I'm gonna be sick. And she's like, what's the matter? I'm like, because he didn't learn the lesson. It wasn't about the real estate market.
There's no responsibility there. There's blame and justification.
That's exactly.
And being a victim.
It wasn't my fault. It's the market. And I was like, I'm like,
right. The market made the decision for you.
Yeah, exactly.
Sure.
So let's switch off real estate and tell me about Yokedo.
Yokedo is my martial art. It's a blend of yoga and Aikido. So I've been studying Aikido for almost 20 years. And as I was going through the process of growing into that martial art, and I think this happens for a lot of people as they're studying, especially martial arts, they start to develop their own version of things and their own essence and energy. And then I got into yoga because I was looking for a place to really learn how to meditate. And the co-author of Reinvented Life told me that he goes to yoga so that he can open himself up to meditation. And I went, that's awesome. So I got involved in that and realized, wait, these are both about breathing. And then there was this amazing synergy between the yoga and the Aikido where I could bring one to the other and the other to the first. And I went, these need to be together. This is me. This is my essence. This is my energy and my gift. And so now I'm able to share that with people. And they get both. They get the Aikido, they get the self-defense, the confidence, the move, and then they get the yoga, which is really about building your core and your breath inside out. And the Aikido is more about presence in my mind. And so now spending time with people, they get those things meshed together and they come out going, whoa, what was that? So
now, are you teaching it?
I am. Yeah, I teach it in Austin.
Nice. Now, is it spreading nationally, or is it just an Austin, got to be in the Austin Club thing?
It's in Austin right now. We'll see where this goes. I mean, we all have this certain amount of bandwidth, and I put this energy and love into it, and I think eventually it'll grow because it's almost got its own heartbeat, and it's very cool when people experience it. So I have no doubt that it'll eventually spread beyond Austin. So
you're gonna start training Yokedo instructors?
I think that's inevitably where it'll end up going.
Nice. That's awesome.
Yeah.
I've never met anybody who started their own martial art before.
I don't think I had either. What was cool, there was a little bit of a spur. The guy that I had trained with here in Austin in martial arts for a number of years had founded his own version, and he'd been training for 25, 30 years. And I just thought that's really, really cool. And why can't I do that? Why I should do that? Because that's really a gift. Why would I keep that inside me? And I saw him and how happy it made him and the influence it had in elevating people. And I went, okay, I'm going to do that too.
You know, when you say I started my own martial arts, I'm kind of getting, this picture in my mind of Mr. Miyagi or, the Last Samurai or something. Usually you should be of Asian descent somehow or, spent many years very quiet in a monastery somewhere. I don't know. But that's awesome. But, that's a good claim to fame that I don't think a lot of people have.
No, there's a lot of brain damage, and it's really not an academic thing. There's a book by a guy named George Leonard, and he wrote the book called Mastery. It's one of my very favorite books. I studied the book.
Yeah.
Great book.
It's like 20 hours on audio or something crazy.
Yeah, I mean, there's so much value though in understanding mastery. It's not something you read; it's something you live, and it's a lifetime pursuit. And so if we start to if we take that as our focus instead of just these moments in time, these success moments, then you start to evolve into your own your own thing. And that's what happened in martial arts. There was this pursuit of mastery, and eventually there is this space where you pop out into something that's unique, and it almost doesn't make any sense to not share that. You feel like you feel compelled, like it's a responsibility. You have to. So that was the mastery.
Nice. That's awesome. That's awesome to hear. Damien, what's the easiest way for the listeners to connect with you?
Easiest way is to visit my direct page, which is damienlupo.com. There's everything there. There's social media. There's the books. You can find me anywhere you want in any form you want. And then if you have interest in a particular thing like the QRP, you can visit totalcontrolfinancial.com and there's more info there and the book and as much as you want, it's there.
That's QRPfinancial.com and totalcontrolfinancial.com. And the book is Total Control Financial Guide to the QRP.
Available online in 15 seconds.
In 15 seconds from Amazon.com or from your website. You're going to have to come back on and further help us digest this because you've given us a lot. And it's like, wow, I mean, I've used self-directeds for a long time. And now I'm like, wait a minute. There's something better? There's something better?
Yeah. Something that dominates the past stuff.
Does it? Well, bigger, better, faster, right?
It's a 10x event. I mean, it's truly a Grant Cardone type of experience. It's 10 times better than everything in the past that you've ever been exposed to. So you want 10x? This is your answer.
There you go. There you go. A plug for Grant Cardone. Yep. Damien, thanks for being on.
Thanks, Gavin.
All right, dude, we're clear.
Cool.
I think we covered everything, right?
I think that was beautiful.
Cool.
It just drilled, man. It was great.
Cool. Well, I appreciate it, and I'll send you an email to come out probably in about 3 weeks or so.
Okay.
But other than that, anything else exciting going on with you?
Oh, goodness. What else is going on that's exciting? Miami coming up. Starting to outline the next book, which is always fun. It's like a vomitous explosion of joy.
Information?
Yeah, it's funny because you start off, it's like this giant brick or this giant piece of granite, and you start chiseling, and you have granite flying everywhere, and there's dust, and you're coughing, and you don't really know what it's going to look like, and then it starts to form up, and you get excited when you can see the imagery before you. So that's really, I'm chiseling granite right now.
Nice. Now, who publishes them for you? You publish them yourself, or you have a publishing company?
Yeah, right now, typically most people are going, unless they've got a massive following or something, they're going to go, right now everybody's using CreateSpace on Amazon because it's on-demand publishing. There's no inventory. I mean, they print the book for like $3 and they print it today. So you order it, it gets printed today, it gets shipped, it's in somebody's hands in 2 days, and there's no overhead. So, I mean, I don't know how you compete with that as a publisher. The only reason publishers are going to do something.
$3 a book?
$3. The only shift really is if you're going to do a hardcover. Yeah.
Oh, wow. That's super cheap.
Yeah. This is the efficiency of Amazon. It's crazy, but that's what's happening. And the Random Hill or the Random House or Pelican or whatever these things are, they're looking for the next Harry Potters. They're looking for the mass distribution where people are going to go to a bookstore and they're actually going to be in line.
Yeah.
That's not most books anymore. They're right on.
And what's that called at Amazon?
CreateSpace. I think it's createspace.com.
Because Nicole's got a book she's working on her too. CreateSpace.com. Well, yeah, and somebody told me books are the new business cards.
They are the new business card. That's why I'd set these different books up. Reinvented Life was more because I needed to get all that crap out of me, and then I thought this is cool. Maybe somebody will pay attention, but really I need it out because it was so toxic.
Yeah.
So, but the other ones were really that's what it is. It's a business card. Do you know what you're talking about? If you write it down and put your name on that thing, you can't hide. You can't say, well, I didn't say that. It's like, hey, you wrote it on
It's
page
in
12.
print. Yeah, exactly. Wow. Well, it's probably like a healing process too,
It's huge.
to get through it. So that's awesome. Cool. I'll be looking forward to the next book.
Excellent.
I'll add it to my Lupo collection of books.
Your Lupo collection of books.
Exactly, man. Well, have fun in Miami. If I don't talk to you before, but holler if you need us.
Sounds good, man. Thanks for your time. Appreciate
No problem. I'll shoot you an email when this thing goes live.
Okay, cool, man.
Bye.
All right, see ya.